Hey, this is Matt from InvestiQuant. Today is Friday, October 16th, 2020, and today is options expiration day. The markets are currently pushing higher in the overnight session. It's been a fairly quiet overnight session, but we are trading a little bit above yesterday's high at the time of this recording, but right at the border. So what I want to do this morning is just kind of look at up gaps on options expiration day in a similar environment. And we will do that here in Discover by clicking all four instruments. The setup is going to be entering at the open as a long. It will exit at the close of regular trading hours, which is 4:15 p.m. Eastern time. For the opening filter, like I said, we're trading right around the prior day high. So this is one that you can come in and adjust on your own based upon where we end up opening. But since I don't know if we're going to be opening in range or out of range this morning, I'm going to be a little more generic about it. And I'm just going to say gap up. So that just means opening above the prior day closing price. Next, I'm going to go into indicators. And I am going to say that we are above a 10-day simple moving average, above a 200-day simple moving average. So that creates a bullish environment. And then lastly, market events. Today is options expiration day. Just come over here to the active today section, click on options expiration day. That adds it. It's in this middle category. If I scroll down, you'll be able to see it here. And then I'm going to hit view results. And here we go. So these are the results of going long at the open of regular trading hours when you gap up on options expiration day in a bullish environment. We've got nice sample sizes here, 70 samples in the S&P, 73 in the NASDAQ, 74 in the Dow, and 55 in the Russell. And they are in agreement here. You can see the win rates on these are all fairly weak. We've got S&P 41%, NASDAQ 35%, Dow 40%, and Russell 33% winners here. So historically, this has been a pretty weak day. And again, I'm just using gap up. I don't know where exactly we're going to be opening, and that can make a little bit of a difference on the win rate. But generally speaking, the up gaps on options expiration day in this type of environment have been pretty weak. If we take a look at the average win, average loss, S&P average win smaller than the average loss. That is the same in the NASDAQ. Pretty similar win size and loss size on average here in the Dow, and then average win just a touch bigger than the average loss in the Russell. And lastly, real quick look at the view results distribution. I got the S&P selected here. This chart shows the trade count on the vertical axis and the P&L in dollars based upon trading one contract of the ES on the horizontal axis. We've got 0 right here in the center. The red bars represent the losing scenarios. The green bars represent the winning scenarios. The farther to the extreme on either side, the bigger the move has been. And historically, majority of these, there's a nice fat spot here for these losses that go down to roughly, 11, 12 points or so on the downside. On the upside, plus 6, 7 points or so is the normal expectation historically. And then outliers, not super strong on either side here, looking at this scenario. But definitely you can see more losses taking place. There's lots of tall bars here to the left of 0. So hopefully you found that helpful. Good luck today, and we will see you next time.